Guys, this last month has to have been one of my worst months on record. My portfolio got absolutely smacked in September and saw share price declines like you wouldn't believe, with the exception of one stock in my portfolio, which was actually up over 10% for the month, which I'll be telling you more about in this month's portfolio update. But before we get to that, in case you're new to the channel, my name is Ryan Williams, and here we talk all about dividend investing and how you can do this to create passive income and reach financial freedom. So if you love dividend stocks and if you're on a mission to retire early, then hit that subscribe button. I'd love to stay in touch as we both continue to grow our portfolios and collect that cash flow. Also, guys, leave me a comment below and let me know which stocks you picked up in the last month. I'd be curious to hear what you've been adding to your portfolio. Anyway, guys, taking a look at my dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to download this in the description of the video. But anyway, this tells us my portfolio is currently valued at $47,175.80, which is a lot lower than it was this time last month. And I'm also officially seeing a negative return across my entire portfolio. Like I said, guys, I got just smacked this month, and there was actually one day where every single stock I owned was in the red, which is kind of a unicorn event that rarely happens. But anyway, just in the month of September, my portfolio was down almost $1,900. Like I said, it was a very big drop. And looking at the breakdown, I actually lost over $2,000 of unrealized gains just in terms of share price in the month of September. So over the last 27 days, pretty big drop for me, but luckily I had some of that dividend income come in to ease the blow, and I'm actually missing one near $11 payment that has not been reflected on this page yet. If you saw my last video, then you'll remember I actually brought in about $130 of dividend income in September. And one thing I did not mention in that video, which I'll share now, was this was actually my lowest month of income so far in 2023. Actually, it was my lowest month of income since last October. But anyway, I will take it. And this leaves my portfolio with a minus 3.84% return for the month, which does kind of sting, but I am glad to see that the rest of the market is down and it wasn't just me. And I'm especially happy to see that my portfolio saw less of a drawdown than the S&P, who was down 5% for the month, and the NASDAQ, who was down closer to 7% for the month. Overall, it's pretty wild to see what's been happening to stocks lately. I mean, if you just look at how many are down here and actually how many are down over double digits, and it doesn't stop if you just keep on scrolling. Anyway, back to my portfolio's rate of return. Now we're looking at the year-to-date performance, and it's still in the green, which I guess is good. I'm up 0.4%, but I am dramatically underperforming the rest of the market, which has been the case all year, so I'm really not surprised. But the S&P is still holding strong with a 12.6% return. The Dow Jones is doing okay, up 3%, and the NASDAQ is still up about 25%. Anyway, back over here on the spreadsheet, my projected annual dividend income right now is sitting at $2,236.89, which is almost $100 higher than my projected income this time last month, where it was sitting at $2,137. And looking at this on a year-to-date basis, that would mean that I have added about $322 of annual dividend income. Now, that's obviously very exciting, and that's a huge jump, but I'm honestly not 100% sure how accurate that reading is. For me, that month-over-month increase is the highest that it's ever been, and I haven't invested anything additional outside of my normal contribution, so it kind of raised some flags. And looking at my projected income reading directly from Charles Schwab, this has my income sitting at just under $2,200, so there's a bit of a discrepancy there. I'm not 100% sure why my income reading is so high this month. I think it could have to do with both Main Street Capital Corporation and Blue Owl Capital Corporation paying special dividends, so that could be affecting the reading, plus Starbucks just announced a nice 7.5% dividend increase. So I do know that's playing a role, and I am stoked to see that. So we'll see what happens, and I do hope this reading is accurate because that would be really sweet, but at the same time, I wouldn't be surprised if by the time we check in next month, this income reading is just a little bit lower and corrects itself. Anyway, guys, switching gears and taking a look at my best and worst performers for the month. Starting with my worst performers, we can see that Real Estate Investment Trust hit me the hardest, with WP Carey at the top there as my worst performer, who saw a huge 15% drop after announcing that they'll be spinning off the majority of their office portfolio into another REIT called Net Lease Office Properties, which they'll have the ticker symbol NLOP, and they'll be selling the rest of the office assets remaining on their balance sheet. In other words, WP Carey is getting completely out of the office sector, and they're doing so as fast as they can. And if you want to learn more about this, I covered it in detail in a recent live stream, which I'll link in the pinned comment below. But anyway, the market did not respond well to this news at all, and both Realty Income and KRC dropped double digits in tandem with WP Carey. And then along with those, I had some other pretty poor performers for the month. I mean, Coca-Cola saw a pretty big 7% drop. Lowe's was more or less the same. Johnson & Johnson, Apple, Starbucks, Procter & Gamble, Snap-on, Altria Group all saw pretty big drops as well. But anyway, switching gears, looking at my best performers for the month, Williams-Sonoma was that one stock I was talking about that zigged when the rest of my portfolio wanted to zag, and really shined in the last month with a near 12% gain after news came out that one of Leonard Green's investment funds took a big stake in the company. And I'll tell you you what, I don't remember Williams-Sonoma jumping like that when I announced that I'd bought it, but whatever. In addition to this though, I had a couple others do pretty well. I mean, Chevron with a nice 7.5% jump, that's definitely not nothing. AT&T saw a nice gain up 5.4%, AbbVie and Intel both up 4%, EPD and OBDC right about there as well. So there still was some green to be found in the last month, which is good to see. Anyway, moving on and getting into my buys for the month, I pretty much only added to the two stocks that were down the most for me. That's going to be Realty Income. I added 5 shares of that bad boy. I mean, how could I not? I know a lot of you guys are buying some Realty Income as well, which is good to see I'm not the only one. And then WP Carey, I also added quite a bit to this one, even more than Realty Income actually. I invested about $360 into WP Carey and picked up 6 shares, along with a $200 contribution to my Roth IRA throughout the month, which brings my total purchases in September to $830.44. And then on the topic of my Roth IRA, just taking a quick look at this, it ended up dipping down below that $5,000 mark it was at last month, and it's currently sitting at $4,931.50. And in the last month, it was down nearly 3%, so quite a big drop for the Roth, which brings the year-to-date performance to still in the green, actually up 1.5%, and my all-time performance, I am down about 2.5%. And so taking my $4,900 Roth IRA that's bringing in $141 of dividend income and adding that to my main taxable brokerage account that is bringing in over $2,200 of annual dividend income, this leaves me with a total portfolio value of about $52,100, and my annual dividend income is currently sitting at $2,377.73. And like I said, that number could be incorrect, but in case it's not, that means that I am less than $25 away from reaching $2,400 of annual dividend income, which averages out to $200 per month. My goal was to hit that by the end of the year, but by the looks of it, we should be able to cross that milestone just in the next month, which is awesome. And with that in mind, it's actually a good thing to see a lot of these share prices coming down because it's making my investment dollars stretch farther, which makes it easier to grow my dividend income at a faster rate. So we'll see what happens in this next month, but I've got a good feeling about it. And if we take a look at my watch list, which I call my due diligence list, these are the stocks that I want to do some more research on and spend some more time with. And in the last month, I've actually done that with Shutterstock. I've spent a lot of time learning about this company, and I gotta say, I'm really liking what I'm seeing. I actually put out a video a couple weeks ago talking more in depth on Shutterstock, which you can check out right over here. In the video, I'll tell you all about the business and why I like it, and I'll also share with you a few reasons why it may not be the best investment and why I ultimately might decide to just pass on it. So click right over here to check that out, and I'll see you in the next one.